Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. We've been in business every market day since October of 2002. We are coming up on our 23rd year anniversary, which is, I'm just really surprised and happy that that is the case. All right, so if you're interested in joining me and a great group of traders in the live options room, which is where this is coming from today, you go to the subscribe menu of drstoxx.com, scroll down to the live options room, click on that. You'll learn more about the room, what goes on in there. You get my every trade, my entry price, my stop price, my target price, the reasons for the trade, a technical chart, updates on stops, position management until we close it out. And the same is true for the live trading room, where we do not options, we do stocks, ETFs, and micro E minis, mostly stocks. And you can add on the second room. You buy one room, you can add on the second room at a 40% discount, and they're both pretty cheap as far as I'm concerned. Great deal. All right, let's move over to some charts. So we are in a very bullish market. As you can see, we've been bullish, bullish, bullish since the April flash crash on tariffs, right? Trump came out, I don't know exactly when it was, maybe right around in here. He came out with his, what was it he called it again? Freedom Day, Liberation Day, something like that. Anyway, the market didn't like it and was very strong downhill from there. Just we weren't sure how much, first of all, the percentages of tariffs were a lot higher than everybody expected. We weren't sure which countries were going to get really hit hard and which countries will get a little bit more of a leniency, and it just didn't know what it was going to do to inflation and to the economy and all kinds of stuff, right? Lots of questions, no answers. Well, as it turned out, the market overreacted as it usually does on the downside. And that was one of the best buying opportunities we've seen since the bottom of the 2022 bear market. And yes, we did get long. We got long some position trades over in the live trading room. And I don't remember what we bought over in the options room, but we probably got long things like NVDA, Microsoft, Google, and QQQ and SPY and all that stuff. So it's been all uphill ever since. We've had a little, 3 or 4 days of pulling back and then bouncing right back up again to new all-time high, a little bit of a pullback, bounced up, a little bit of a pullback, bounced up. We got a 6-week range right in there. That's gone. That's behind us. That's history. We're back in trending mode. Nice uptrend to new all-time highs, a 3-bar pullback, and now we're right back up again and just sailing along quite nicely. And that's just the way we like it. However, there's always a but here. However, keep in mind that markets don't trend that often. And typically, when they stop trending, they make trading a lot more difficult. And we haven't really had, other than that April crash, we haven't had a significant pullback since then. Market is due for one, and very often that happens at the latter end of October. But here we are at the beginning of October. We're in the most bullish 2-week period of the whole year, right? The first 2 weeks of October, most bullish period. And then we get into the latter half of October, and things can get a little bit more squirrely then, just on a seasonal basis, on an average basis. But you know what? There's nothing in the chart right now that suggests there's anything like that coming our way. And as I say every time, we trade day to day to day to day, and we keep our stops tight and our targets reasonable, and sometimes we just jump out when we have to, right? Okay, so that's the S&P 500. The Nasdaq is going to look a little bit very, very similar, right? It didn't quite have as much of a 6-week tight churning period. It was more of a wavy trading range, but it did hit the lows, and then it hit the highs and came back down to the lows again. But we are right now, like the S&P, back in trending action, trending mode, and that's always the easiest way to trade. Now, let me give you a little bit of a tip here. I trade 3 different kinds of setups, put them in broad categories, right? Pullbacks, which is my favorite, my bread and butter kind of setup. Tight consolidation of a pattern of some kind in an uptrending market. So that has to happen first. The trend comes first, and then the tight consolidation or breakouts. And I try not to, sorry for the dog in the background, I try not to trade breakouts except on the very first day of the breakout, or maybe the next day after as a confirmation day. If you have a breakout and it's like 4 or 5 days up above the breakout line, no, don't do that. That's you're chasing momentum, and that's usually a bad idea. So in a market like this, you can't really trade breakouts all that often. There usually aren't very many good ones out there, and the ones that are pulling back in an uptrending market at new all-time highs usually have some kind of a problem. So pullbacks are not the best setup in this kind of market. Tight consolidations are, and that would be my favorite way to play a bullish trending market. And you can trade breakouts, and you're really going to have to trade breakouts if you want to stay active in your trading. But look for that first day, right? The first day above a resistance line. Okay, so the small cap index is doing pretty well. We're not at all-time highs just yet, but we're very, very close to that. And it's been a little bit weaker, right? So here's that sideways 6-8 week choppy trending action. It was very tight for a while, and then it looked kind of scary all the way down to the 200 period moving average, bounced back up again, back into the 21, bounced back up, and then another tight period right in here, and then a breakout, and then a pullback. It's not a trending market. This is let me take that back. It is trending in the sense that it is going higher, right? The lows are getting higher, the highs are getting higher, but it's been pulling back and consolidating along the way. So we might call this a choppy uptrend rather than a nice flowing uptrend, which was what we're seeing in the other two indexes. You can trade this, but I wouldn't trade a breakout. I would trade the pullback, right down to the 21 EMA. Or if it gets all the way to the 50, the 200, load up right there in an uptrend. But the 21 is just fine. You've got a nice touch right there. Big 2-stick upside. Nice little reversal inside day bar. Big stick upside, sideways. Got close to the 21. Breakout. Back down to the 21. Pushing higher. Don't buy the breakout. Buy the pullback in a market like this one. All right, we're long Bitcoin in several ways, and it's just been off to the races, new all-time highs today. We were long Ether in one or both rooms. I'm actually flat Ether right now. I got out a little bit too soon, but I got out this morning on the big run up, and it just has gone a little bit higher, but I'm going to wait for a pullback on that one. Bitcoin, I think, is a hold. It's not a buy. No, you want to buy on pullbacks in the cryptos, but not on a big breakout move like this, unless you've got a really long-term horizon. But it's certainly a hold, and I kind of see. So there was a shift out of Bitcoin into Ether for a little while, right? You can see Bitcoin had this sideways underneath resistance, got up to new highs, and then it was a really long and nasty pullback that came all the way down to the bottom of the linear regression channel. And if you compare that to Ether, you're going to see that the pullback was not nearly as sharp. It wasn't all the way down to the pink zone of the LRC, with one exception right here. That was a pretty nasty fall if you were long Ether. But you can see that the trend of the moving averages and the angle of the LRC are much steeper than Bitcoin. So I think we had this flow out of Bitcoin into Ether. Now it's maybe going back again, right? So we're getting out of Ether and back into Bitcoin. So we're long gold in, well, I'm long gold personally. I don't think I have official position on in either room, but this has been a long-term position trade for me. We were in GLD calls a few months ago in the options room. We were in Shiny. Yeah, we were in Shiny. I think we took profits last week in the live trading room. And I'm still in some Shiny. I'm still in some UGL, which is a 2X. Shiny's a 3X. UGL is the 2X. And I tell you what, I'm not going to sell until we get maybe up to 43, 4,400. And that could be a year from now. I don't know exactly, but I just have so much profit in that position. I just don't really feel any great need to sell. And it's not a real big position for me anyway. Okay, so enough of those indexes. Let's take a look at the biggest companies on the planet, otherwise known as the MAGs, the MAG 7, the stocks that are right at the top of the NASDAQ 100. It's a weighted index, and these 7 or 8 stocks comprise 35% of the NASDAQ 100. They comprise maybe 27, 28% of the S&P 500. And these are the stocks right here. Let's take a look at worst to best. I have a few more that aren't considered members of the Mag 7, but they're in like the top 20 tech stocks in terms of market cap. So that's the list. I call them my mags. And when these guys are happy, the market is happy. When these guys are not, then you're looking at rotation, right? Coming out of blue chip tech and going into maybe some beaten down sectors. We've seen that happen with energy. We've seen it happen with healthcare. We've seen it happen with real estate, right? So you get a day where all the mags are red, but those sectors are green. And we had that last week. We had that a couple of weeks ago. And we just call that rotation. Sometimes it lasts for a little while. You can make a trade out of it. Sometimes it doesn't last very long. Sometimes it's just a one day wonder, you know. But for the most part, the mags are happy today. The worst one is N2, but it's actually not a very good looking chart anyway. It's nowhere near all-time highs when the index that it's in is at all-time highs. NVIDIA is down here as well, which is an interesting place for NVIDIA to be in a generally uptrending market where the tech-heavy NASDAQ is up almost 1% right now. Well, what's going on there? Part of that is AMD signed or inked this big contract with OpenAI, and it's kind of a little bit of rubbing salt in NVIDIA's wounds to have that happen. I expect OpenAI just got better pricing power from AMD than they would have from NVIDIA. But that raises a little bit of concern. And then there are some China headwinds with NVIDIA and really with all the chips, but mainly NVIDIA. And there was a third thing that was kind of weighing on the stock. Now, I don't think NVIDIA is going to go down very far. It is in very much buy the dip mode, but I would wait, right? So here, let's take a look at this chart, because this is interesting. This is a nice uptrend off the April lows, and this is the kind of consolidation I'm talking about. The highs are getting a little bit lower, the lows are getting a little bit higher, and we get this apex forming right there. And almost got out to the very tip of the apex, but not quite. That doesn't happen very often. And where do you trade this? Well, I prefer to trade by buying inside of the wedge, not when it gets up on top. So if you bought down here, like say you bought, I don't know if you would even buy that day. It looks a little scary, but you might buy the next big day where it bumps up, it regains the 21, regains the 50, and you're in at $175 a share. 2 days later, you're up here at 183, and then you get slammed right back down again below your entry price 3 days later. That is a false breakout, and that's why it's much better, or a bull trap, whatever you want to call it, a head fake, a rug pull. You want to buy down here inside the wedge because you're taking much less risk. You can keep a tighter stop. And when it does break out, you can start to trim off some of your profits, move up your stops to protect your profits. And then you're not hurt so much when it does come right back down again. I came all the way down to the lower edge of that wedge. Another good place to get back on board if you got stopped out. You're up already profitable at the end of that day. And then it was boom, 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 4 or 5 days in a row, new all-time highs. And it's coming down just very gently, little by little. And maybe it has 2 or 3 more days of some softness there. There's a gap down below that might fill. Otherwise, I think it's probably just going to hit the 21 period EMA. And that might be a good place to get back long NVIDIA. I've got long-term shares of NVIDIA, but I'm not in a swing trade with NVIDIA, and I don't recommend one just yet until we see this little pullback get cleared away. Now, we were in some Apple. No, we're still in some Apple. Yeah, we missed a stop out this morning in the live trading by 4 cents. 4 cents, if you can believe it. Now, we kept moving our stop up because we got down here in this little bull flag and it started to go higher. And then today is just some, I don't know exactly what's going on, but it's sort of back and fill off of a big green stick Friday. Today's Monday. And we're still in the trade. So we're just going to hang on to see where that goes. I would say Apple is still a buy here because it's still in that consolidation mode, the bull flag mode at the top of a nice looking uptrend and breakout move. So still bullish in my mind, but a little bit disappointing today considering the strength in the rest of the market. Let's go down the list here. Amazon, we did get knocked out of some Amazon calls this morning in the live options room. It was this big flash crash this morning that knocked us out, and then it was right back up again. As you know, these things happen, right? So Amazon is printing what may be a very nice rounded bottom pattern. Right? These do tend to be very bullish in a good mag stock like Amazon. And when it comes down into an area of support, prints this, sequence of lower lows and then higher lows, giving you a nice rounded bottom as opposed to like a V bottom where it just goes down and then right back up again the next day. This takes some time. Takes some time to make the bottom, takes some time to get out of that bottom, and that's usually much more bullish than something that just happens overnight. When it goes straight down and then straight back up again the next day, the market has miscalculated in both cases. And typically, you get another leg lower once the relief rally is done. We don't want to get into a stock down here only to see it go lower still. So um, we're flat on Amazon. I don't know. Well, I do have some long-term shares. I don't think I have anything short-term in Amazon right now. And I would kind of recommend not getting back into the trade just yet. Let's see if this little base, which is leaning but bearish on the volume print down here. And what do I mean by that? So if you look back over the last couple of weeks, it's been pulling back into the lower edge of the LRC. You're going to see a lot more red sticks than green sticks, and you're going to see taller red sticks than green sticks. And that means that more people are getting out of the trade than are getting into the trade. And that's not exactly that's not bullish. So we kind of want to see that volume balance change a little bit. A couple of good big green sticks, good accumulation, taking out some of these range highs in here, right, which are right around 223. If we can take out those range highs, we get some good volume coming in, then you can get back into Amazon. We just went long a Facebook in both rooms. So we used the 2X ETF in this live trading room, and we bought some META calls in the live options room, and it's just been going up and up and up. So this is a really good sign. We've got good volume. Yeah, this is also bearish. This is bearish volume balance right here. Not something you really want to see, but I have been tracking Facebook every day of this pullback, waiting for a confirmation buy signal, and we just got it today. Here's the buy signal. So we flushed out a whole bunch of weak hands, new stops, longs that aren't very confident in the trade. They all got out early. And then it's just been up, right? Everybody that wanted to sell is out. The market's going back up. We've got a reversal bar. We've got high above average volume. We're certainly going to top the previous Friday's bar for volume. That's your buy signal right there. So that's that. Okay, what else would be interesting here? So we just went long some Google. We did this in the live trading room. We used the leveraged version, GGLL. And I'll tell you one reason why I got long Google. We could have gone, here's the thing. So I managed these two rooms, and I tried to keep the number of trades in each room about equal. Right? I don't want to have like 12 trades on in one room and only 4 in the other room. I tried to do it as equal. So I look at how many opens we have in each room, and if one was I think at 7 and the other was at 8, so I'm going to put on a new trade in the room with 7. Now that's usually what I do. Sometimes it just has to be an option trade, and because it's just the most it's a smart trade to make, not the shares but the options. So we do it in the options room, and sometimes maybe the options aren't very liquid, or there aren't enough strike prices or whatever. It's better to do the shares, and then we do it in the live trading room. Hope that makes sense. But here's the thing, Google. So take a look at black box stocks, which is my favorite place to look for new trading opportunities. And one of the things I look for every day is this alpha gold alert. So the software has a algorithm that determines, if the trade is extremely unusual and the guys getting into that trade are extremely urgent. I mean, they really need to get in, so they're going to pay whatever it takes to get into this trade. And if the volume coming in is way more than open interest, and maybe there's some other things in there, then it triggers an alpha gold alert. And you don't get very many of these a day. Some days you don't get any if it's kind of a slow, quiet day. And some days you might get 4 or 5, but typically you get 3, maybe 4. And today there's one for Microsoft, there's one for BE, there's one for Sophie. We're long Sophie shares in the other room. And there's one for Tesla. We're long Tesla calls in this room. That we did that last week. It wasn't from an alpha gold alert. Somewhere along the line is Google. Where is Google? Right off the bell, right? 3 minutes after the bell, Google got an alpha gold alert. So I filed that in the back of my mind, and I started to take a look at the chart later in the day after my lunch break, and this is what I saw. So I saw this nice looking, big power gap right here. This is a power gap on it's not on earnings. I am now forgetting why we had that big power gap. No, it was the end of the dismissal of the what do you call it, the lawsuit or litigation against the company, and they were able to keep their Chrome service. They didn't have to spin it off like the courts wanted them to, and so that was huge. That's really good for Google. The market had been kind of tepid toward Google while that was in process, but once it got dismissed, Google's been off to the races. We've come nowhere near filling that gap. So what is the market saying? It's saying the stock is no longer a low $200 stock. It's now a mid $200 stock because it's worth that much. And we had a topping out with the rest of the market. Market had a little bit of a topping out as well. A little bit of a pullback to the 21 period moving average, and then a couple of days of what we might just call churn, right? Getting some bulls out of the way and getting some bears out of the way, bringing in new bears, new bulls. A couple of days of churn, but then when I saw that alpha alert, I kept an eye on the stick here, the green stick today, and it started getting stronger and stronger. So we got on board. Okay, Microsoft, kind of have a thing for Microsoft as well. It might be a little bit late because this is a big green stick, and I have a rule: don't buy big green sticks. Wait till the next couple of days. You tend to get a better price. But if we take off that drawing, which I don't think is actually the operative pattern, we have a big up on earnings, and it came all the way back down. That was an overshot on earnings. The market said, no, you're not worth that much. You're not a $550 stock. You are, in fact, a $500 stock. They brought it all the way down. But it's a rounded bottom, and you can see the lows keep getting a little higher, a little higher, a little higher, breaking out of the range, a little bit of a consolidation underneath the tops of the range, and then boom, big upside today. So Microsoft looks good, and we probably will be long either MSFU shares in the other room or calls of Microsoft in the options room, but I'm going to wait a day or two just to see. Tesla is not the greatest of setups, but it has been very, very buoyant, almost at all-time highs, and it's printing a nice reversal bar today. We bought this dip right here near the 21 at the low end of the range. We got long some Tesla calls. We didn't do it at the very bottom. We did it toward the close of the day after it had already risen up, because that you kind of want to wait. When something's dropping, you watch it hit support, you wait for a hold of support, and then you start to buy when it starts climbing back up again, and that's exactly what we did on Friday, and now we're getting some nice return on here on Monday. AMD was a big star of the day. Some of us in the room were long. Some in the other room were long AMDL, the leveraged version. My AMDL shares were up over 70% from Friday's close. I can't remember, other than an option trade, I can't remember seeing that kind of a one night return, because I don't play the risky stuff. I don't play penny stocks. I typically don't play too much of the Momo crowd or the meme stocks, but man, it was nice to see that this morning. All right, guys, I'm going to let you go. I'm going to record this, produce it, get a link back into the get a link back into both rooms, and then we'll finish off. We've got over an hour of trading. Again, if you have charts for me to do some analysis on, ticker symbol, Dr. Stoxx handle, and I'll take a look at them. God bless everybody. Have a great rest of the afternoon. We'll see you back in the room in just a little bit. Bye for now.